Right, what's up, everyone? Today we're just kind of going to give a brief, unedited, just talking video covering what we might see for the week ahead. This is what we're really going to be covering here. We're going to be covering the tweet that came out this morning regarding Trump and China, the bullish CPI that we had on Friday. We have FOMC on this upcoming week as well, which is going to be huge. We'll probably avoid trading on Wednesday, which is when FOMC is, unless we get some kind of clear direction. Indexes are at an all-time high, especially after Friday's bullish CPI or consumer price index data release. And we'll be talking about if will BTC will follow indexes finally, as we're seeing an illiquid kind of Sunday pump, as we tend to typically see sometimes, due to spoofing on Binance, trying to bait longs in, or say Binance, small win to mute the execute on Binance spot books. And we'll briefly be covering, is there still an overhang of the US government shutdown, considering this is what traditional markets are looking like? Right, so I guess the kind of main news that we've had this morning on Sunday is that the US and China reach early agreements on key issues following successful trade talks. Well, why is this bullish? Well, as we can see here, from Friday the 10th, the same day we saw the largest crypto liquidation event ever. We know that just as New York session opened is where Trump started to basically talk about issuing tariffs on China again. And obviously we repriced much lower throughout New York. We ended up taking out a bunch of these lows here as low resistance liquidity, turning them into high resistance liquidity. And right towards the end of the session, where we saw kind of Wintermute turn off their algo and Bitcoin kind of nuke, is where we also saw Trump kind of give the exact figure, which was 100%. Markets ended up tanking so much further throughout as the market closed, but futures were still open. But naturally, we've seen this repricing higher ever since, which I guess kind of opens the discussion to see how much impact these tariffs really have on traditional markets. Obviously, at the beginning of this year, when Trump was just inaugurated and he came on live TV with his board and started slamming tariffs in every country, we hadn't seen anything like this for a while. The initial shock was huge, and this is kind of when we saw this huge fake out to the downside here. Obviously, that was in April. We ended up taking out a bunch of these lows before we repriced higher. But now, obviously, markets, the initial shock was the macro uncertainty, ended up taking out a bunch of these lows. But I guess what Trump is going to show that is that these tariffs don't really last. They're more kind of talking point for him to kind of get in and kind of get his way, right? So ever since that happened, we kind of saw naturally market structure shifted. We changed this changes state delivery, and markets kind of ended up repricing significantly higher, which is great. But also notably on Friday, we made all-time highs across indexes. So even if we take a look at ES here, yep, we made a nice all-time high there. And that is because of the bullish CPI that we had. Right, so just quickly covering what we just spoke about. So tariffs lead to an increase in inflationary pressure due to a rise in cost of consumer goods. And also, as we had headlines mentioning, there was a potential trade war looming. Obviously, this isn't good, but again, it leaves the door open for the discussion of have markets become immune, obviously apart from the initial shock, to kind of tariff headlines. As we've seen, they're more of a way for Donald Trump to get his way amongst other foreign leaders, and they haven't this year typically lasted. They typically get removed when countries give in and kind of give Trump what he wants. But however, why do we get this initial shock, or why do we see traditional markets kind of react this way and start to become low time frame, kind of risk off until we get that kind of macro certainty or confirmation that they won't last? Well, tariffs, the long-term effects of tariffs are longer lasting inflation, which means the Fed is less likely to cut or continue QE and stimulating the economy to slow down the inflation rate. Obviously, this only means this is only a kind of a long-term effect if we kind of see them carry on for months and months at a time. Macro uncertainty increases, which leads to suits or TradFi kind of de-risking and becoming less risk on. They may end up becoming delta neutral or kind of risk off, depending on how bad or how far gone these tariffs become. QE or quantitative easing becomes rotation into quantitative tightening, meaning interest rates rise, meaning there's also less reason for markets to kind of be risk on as borrowing costs rise and macro uncertainty rises. The denominator or DXY or US dollar rises as quantitative easing slows, meaning the less printing of US dollar, meaning the less devaluing of the denominator itself. Interest rates rise, and large capital would rather accumulate yield from holding the dollar in banks rather than being risk on. Right, so now talking about the CPI data that we had on Friday. This really was a great result, especially for those in favor of markets being risk on. As we can see, the previous yearly CPI data release was 2.9%. The forecast was 3.1%, and the data release we actually got was 3%. So for those who don't know what CPI is, CPI is essentially the consumer price index, or the rise in cost of consumer goods over the span of a year, which is what we look at. So really and truly, this is the Fed, or the Federal Reserve's main kind of way to judge consumer inflation. And as we can see, obviously, naturally, over the years, every year, inflation is going to rise because of the mass printing of currency. And obviously, then consumer buying power decreases every year, yada, yada. But inflation rising lower than forecast is great for risk, because essentially it shows that the Fed now has room to cut interest rates, and more room for QE without kind of putting more pressure, on the inflation rate. And with all the kind of riffraff we've had with tariffs this year going back and forth, people really expecting the inflation rate to come out extremely high. And but yeah, so this is obviously a great result, especially with us having FOMC next week. It kind of not solidifies, but kind of increases the chances that we are going to see a continuation in QE at Wednesday's FOMC, and kind of see that more kind of risk on momentum, and obviously could contribute further into this week's bullish trading environment. Right, so just taking a look at BTC here, using order flow. So quickly, for those who don't know, order flow essentially allows us to take a look into price and kind of see who moved price, what moved price, and then essentially make a judgment from there on the health of a move. We can see here that through kind of Asian hours, market just kind of chopped. Well, we're in an illiquid Sunday anyway, because traditional markets are closed. There's no kind of institutional TWAP that could be driving price. ETFs are closed and whatnot. So price kind of moved, but then really and truly the announcement came out around 11 a.m. GMT, but we saw a spike in spot bid prior, so somebody definitely had knowledge of this. Obviously, wouldn't be surprised with all the insider stuff that Trumps have been doing, but open interest stayed kind of flat as futures CVD spiked. Well, what does this mean? This means that there must have been a ton of short stops kind of resting in this kind of area here, because OI stayed kind of flat, but also you can see the short liquidations here. Due to the high spike, this must have meant that longs were aping aggressively into this, but an equal amount of shorts were getting stopped out on this move here. Shorts being stopped out at market buys obviously contributes to buy side metrics, as they market buying long out of their position, allowing price to spike higher and contributing to a spike in futures buy side metrics. As we can see here, though, again, the argument that retail has too much access to leverage keeps coming up, because on an illiquid Sunday, again, we can see here that over 3,500 notional BTC in majority longs aped just in this period alone, as price attempted to reclaim 114,000 US dollars. Again, though, we could see here that as spot books started to cool off, futures CVD ended up going down alongside with price, meaning that majority of this OI here was short. Around 2,000. Around 2,000 notional BTC worth over $200 million. And again, as price just kind of grinds up here, we can see that, well, kind of OI around 1,000 notional BTC and OI has kind of added in mixed positioning here. But again, over 5,500 notional BTC has added on this illiquid Sunday, just in the space of what? The last 3 hours, 4 hours. The last 3 or 4 hours, sorry. Again, if we take a look here, if we just get rid of all this mess, we can see that there has been a running spot bid, but who has this spot bid been from? Well, if we take a look at Aga Trade, we can see that, of course, it is the usual culprit, Binance Spot. Of course, we're seeing a nice running spot bid from KuCoin, as we have for the majority of this week, and seeing some small support from Coinbase Spot, but again, the volume is not really there. Most of the volume is from Binance and Bybit Perps, as you can see here, but most of the heavy lifting from Spotbooks is being done from Binance, and OKX as well. However, the thing is, this is a typical illiquid Sunday pump. Although the news is great, crypto typically front runs these kind of events before New York Open, and we kind of do normally, not financial advice, see price kind of reverse on these longs as kind of manipulation before we kind of do see that distribution higher. Again, not financial advice, not saying we could see anything, but again, just if I can get my arrow here, we could kind of begin to see some just kind of like a mid time frame AMD kind of, if Binance Spot does kind of remove their floor here. Again, it does, if Binance Spot, remove their running TWAP, it removes their kind of floor and allows the free fall of a long liquidation cascade to take out a bunch of these stops. Again, we could kind of see an AMD here. If we do kind of see chop around these highs with a lack of momentum to kind of take out 114, 115K, we could see some manipulation to the downside with accumulation here, taking out stops before we kind of do see an expansive distribution, potentially, not financial advice, higher. Again, though, what we would like to see is institutional books step in and kind of support price. But again, we are seeing the kind of typical illiquid Sunday playbook where Binance Spot kind of spoof up and prop up books, leaving kind of greedy perp traders aping long on a liquid Sunday into liquid books, prices legging up higher as shorts get liquidated as well, using their buy side momentum when being market stopped out to kind of spike price higher. Spot books remove their floor during Asian trading hours as futures open, and we kind of run all these longs, decimating alts in the process, and kind of before we kind of leg higher. Not financial advice. Right, so just taking a look at the Bitcoin daily chart here, price has managed to reclaim our line in the sand as 112K, which is the high time frame range low, and we're now trading back into the daily breaker that created an all-time high. Again, the new level for us to kind of reclaim, to assume that low-levered longs again could be taken, would be 114.6K, which would be a reclaim at the top of the daily breaker that created all-time high. However, we're still in some element of hesitation to go long here, obviously because this is the amount of manipulation. There's a huge amount of manipulation we've been seeing from Binance Spot and Wintermute. Obviously, if we do kind of see that high time frame momentum return and we do see ETFs having a running spot TWAP, huge amount of inflows, 8 to 9 figure inflows a day, then we do have a running TWAP essentially acting as a floor, limiting the downside on price, obviously for manipulation from Binance Spot and Wintermute to kind of bait and switch essentially levered longs. But again, until that happens, no kind of bullish move has really been sustained. As we're seeing today, a bunch of longs have piled in on this liquid Sunday, and we really, obviously not financial advice, wouldn't be surprised to see them get wiped out and to see us have another move towards this high time frame range low before we potentially do get any leg higher. Again, now this does kind of leave the door open to we do typically have Q4 seasonality, I guess, where markets are risk on, and now we have the Fed cutting interest rates. We've had a great CPI. We're now seeing this kind of trade war or tariff war essentially blow over, hopefully, if Trump doesn't kind of mean revert what he's been saying, as he's known to do. Will Bitcoin and altcoins perform alongside the stock market? Well, this is pretty easy to check. How has Bitcoin performed against the stock market recently? So this is Bitcoin margins against ES, which is S&P futures. And I guess we can say since July, Bitcoin has underperformed the stock market significantly. What we would really obviously like to see is that obviously the denominator here is ES or S&P futures. We would like to see Bitcoin kind of leg higher against the S&P, as obviously the same argument that you take for buying altcoins over Bitcoin, you could then put against margining Bitcoin against the stock market. Why take the inherent kind of leveraged, kind of more volatile risk if the reward isn't greater? So naturally, again, if you could just buy stocks or just buy into indexes or whatnot and kind of have a less, not inherent risk, but be exposed to less volatility and still have that great risk to the great reward to the upside. Why would you then buy the more volatile asset? Well, again, We would love to see Bitcoin leg up higher here and outperform the stock market and obviously give those great returns. Again, obviously then select altcoins that have performed well margined against Bitcoin recently could again follow suit. Right, so just before we wrap up here, just giving a TLDR or overview of what we covered and what we would like to see going forward. So index futures are at an all-time high. This is great for risk on as it shows TradFi bias and the risk appetite increasing going into Q4. Great. We had a bullish CPI on Friday and we have FOMC next week on Wednesday, which, not financial advice, obviously could mean we continue to leg higher. Obviously, that's regarding if we do get the 25 basis point cut, but we wouldn't be surprised to see a whipsaw on the event if we price in or rally up to the FOMC and we cut 25 basis points. Again, this would be a different argument if we do get 50 basis points cut or more, obviously meaning bullish or bearish, depending on the extent of the cut, or even if we don't get a cut. And if the trade war confirms to blow over and the US government comes out of shutdown, then that eliminates a huge amount of macro uncertainty for risk. Remember that TradFi hates macro uncertainty and we would expect risk to outperform the denominator. Bitcoin has again reclaimed the high time frame range low, and is now trading into the daily breaker that created all-time high. We would want to ape long, but again, we're still not sure due to the amount of low time frame manipulation of spot books to bait and liquidate perps. We would want to see a high time frame reclaim of the breaker before we considering aping into low levered perps. Again, we would still trade ISO and not cross due to the volatility, and we wouldn't want to see obviously the tighter liquidations depending on the volatility of BTC as we would margin against Bitcoin. Right, so that brings us to the end of the video. We really hope you enjoyed. If you did, please like, share and subscribe. And again, just before we leave, not financial advice, but we wouldn't be surprised if we saw futures markets start to distribute higher during Asia and essentially front-running New York market open tomorrow with the headline of China and the USA coming to some sort of potential trade agreement. Again, not financial advice, and yeah, hope to see you in the next video.
See you in the next episode. Magnus, out.